Okay. As always, we ask for advanced questions from you guys. And yeah, for those of you who'd like to ask as well in the chat box, please go ahead and do so. We also have our analysts from the research department, from the research team to help answer some of your questions. And yeah, so let's go to the advanced questions at this point. Okay, so this one, I believe we already kind of answered it with April a while ago. The Fed basically turning a bit dovish, interest rates declining, which helped the markets rally, right? So I think we can skip this because we have so many questions that we need to go through. All right, okay, questions on the Fed. Okay, given the latest US economic data like steady unemployment and GDP, what is COL's take on the Fed, on when the Fed will pivot rate hikes? April, do you want to take a stab at this?
Okay, yeah. So I think, okay, there are a lot of indicators that the Fed is looking at, and it depends on how you define a pivot. If it's to slow down the pace of rate increases, I think medyo in the bag naman yan, we'll have a 50. Because that said, okay, they have increased rates substantially already, coming from 25 basis points during the start of the year. We're now at the 4% level. So that is already a significant increase, no? 4.25, then another 50 basis points, then another 25 next year. So that's good enough, no? If you call that a pivot, then yes, that is a pivot. But the unemployment, I just want to tell everyone that they are targeting a 4.4%, so because in their belief, that is what is necessary for inflation to be under control sustainably, and for it to eventually reach the 2% level. So yeah, if you say that a slowdown on the rate hike is a pivot, then that is what it is.
Right. Boss Edward, based on your experience, no, what is the usual market reaction if the Fed, let's say the Fed really does slow down its rate hike? What do you think how do you think the markets will react?
Based on the rally that we've seen, it's basically pricing in already the pivot of the 50 basis point in December 13 or 14. So the way we look at it, because we're active traders that are participating in the US market, we believe that in the next few days, you have an opportunity to be able to participate, because the volatility will be more of the upside rather than the downside until they officially announce the 50 basis point. Then if it's 50 basis point, then it's a sell news, right? So the next few days, I believe that the volatility will die down. It's more of a not too much volatility. So it's a lot of stock picking, rotations, because the main index have rallied so much already. We're in the overbought camp, right? But then you'll see volatility coming in. But then there's a rotation to all these other issues that can still do very well in the next few days, right? Because you have to remember, 80 to 90% of those what they call the ARC issues have gone down so much, right? So, but it is still a bottoming up process. It's not going to reverse. It's just from the bottom to the resistance, about 30, sometimes there are some issues that will go up 30, 40%, right? So that's what we're focusing on. So a lot of more of a stock picking rather than the whole beta, the whole move sentiment is basically on the positive side, not on the negative side. It's just that it's overbought, right? So there's really not much room to go for the big tech. So for us, the window is there. We take advantage of that particular window today because, like I said, the last few months, the hawkish statement was there. It's last week. it was a very dovish statement already by the Fed. So that's since the market, going up. But then, of course, market is, when they announce it, market is already in an overbought situation. So the market has really anticipated this 50 basis point already for the last 3-4 weeks. Yeah. So we're seeing that.
Just to make it extra clear to everybody, correct me if I'm wrong, boss. So basically, the recent rally the past month is the market pricing in the expected slower rate hike in December
That's
of the
correct.
Fed.
That's
And so
correct.
we might see in the next couple of weeks, actually next week na lang, 1 week, mga 1 week or so na lang, maybe there's some rotation pa to the other issues. But basically, most of the move is already there because of the recent
That's
rally.
correct. That's correct.
Okay, that's why we need
So-
that consolidation stage after that. All right.
That's right. That's why we called for the 30 pay, the top slicing last week. We're looking for it to. It just, the market just went down too much last Friday, right? But
Last Friday,
you
yeah.
remember the reason why you were asking us to do this far side, but because we think that the market is really way overbought, right?
Yeah. Sayang nga because as you may know, we were planning this fireside last Thursday or Friday. I mean, who knew that the 2-3 days you'd see SM decline by 10%? That would
I know.
unfortunately. Ganun talaga. All right. Okay, thank you, boss. Thank you. Can we go to the next slide, please? All right, on the global macro, is the fear of a possible recession now priced in on the market? What and then next one, let me read it also. Given that the PSEi is correlated to the US markets, how will talks of US recession impact next year's the Philippine market? Okay, so those two questions first. Maybe Sir Juanis, do you think, based on the price action, do you think the talks of a possible recession is already priced in?
Well, at least for me, it has been. I think the only question I have is how long. I'm really thinking that you're going to see this earnings slowdown that's going to come in, at least in the first and second quarter. But we don't know how long and how aggressive it can be, well, whether it's in the Philippines or whether it's in the US, because there are two camps of people that are coming in there. So yes, that's what this rally was all about. But like we said, because of the length, it might really need to congest while reality comes knocking on our door later.
All right, thank you, sir. April, what are your thoughts on this? Is the possible recession priced in?
Well, if you just look at how the market has performed, then I would say yes, except that if I look at it fundamentally, at the PE ratios, the problem is the US, for example, the S&P 500 traded at a very expensive valuation during the pandemic, to the point that even if it has corrected as much as it has, it's still trading at at the mean, okay, or the historical average PE. So that said, I would be happier if the PE of the market in the US were trading at a lower level. Then I would say that with conviction that the recession is priced in. But if I just look at the market action, I would think that it is. But my concern is the valuations are not cheap enough if I just look at PEs.
That makes sense. All right. So maybe, is it fair to say that maybe they're only pricing in like a shallow recession? Is that one way to view it?
Looks like it. There are hopes that this recession will be a shallow one. And I think the main reason why they think that way is because if you look at the jobs numbers, they remain to be very strong, which is both good and bad, because the labor market has been resilient so far. But then the reason why the Fed is able to increase rates as much as they can is because they feel like the labor market is so stubborn. The wages don't want to go down. Unemployment doesn't want to go up. So it's both good and bad in that respect.
Okay, let's say, April, that the US does go into a recession. How would it impact the Philippine economy? Well, we will also go into a recession with them.
It is I would say that it is a headwind. But then, one of the reasons why, if you do a rewind pre-pandemic, I mean, one of the reasons why foreign investors love the Philippines or loved the Philippines before was they said that we are a very domestically driven economy. And in fact, if you think about how we've performed this first 9 months of 2022, look at the earnings season. Overwhelmingly, so many companies beat expectations. People were just so surprised. And the main reason why, the companies have performed as well as they have is consumers after reopening the economy, went into revenge spending. And it doesn't matter what happens anyway. And in fact, the weakening of the peso has even acted as a benefit for consumers because those that are, or a lot of Filipinos who are dependent on OFW remittances actually had more money. So they ended up spending more. Well, I think a recession in the US would have some impact, but the impact would not be as significant because the Philippines is not such a big exporter, or we're not as dependent on exports anyway.
Okay. So better prospects for the Philippines than the US market. Okay. The difficult question again, Boss Edward, regarding the China, the impact of the current lockdowns in China and the unrest also. How do you see this affecting global markets, Boss?
Well, if you look at the market last Friday, you would see that there are a lot, or over the weekend, a lot of these cities have changed their policy already towards COVID. So indirectly, China, the zero COVID policy is gone. It's already been, they pivoted already. So going forward, you see, that's why even today we're seeing a lot of rallies that came from Hong Kong. All these China issues have rallied so much. So we're also the same thing very similar to the emerging markets. Market has gone up a lot, almost 30% already from the bottom to where it is today. Because we were anticipating after the Communist Party election that basically is the bottom, right? And so the market has also rallied. So this is the biggest problem. So all this announcement today, basically for us, is also pricing in, right? So we're also on the ways top slicing on the way up, right? So this is always so very similar to what's happening to the Philippines now. Yeah, I think the world will benefit a lot from the reopening of China. The reopening of China. So because China is one of the biggest exporters, so as you can see, once they reopen, you will see now the normalization of all these logistics, shipping, all these containers that are locked up in China will now be moving. So most containers prices will be going down. So we will start seeing the recovery of China. But of course, I was just talking to some people from the region, and they are really so scared of what's happening to the real estate prices of that's happening right now in China. So those are the challenges that we're seeing. Of course, maybe because the Chinese market has gone down so much that everybody is looking at it on a very negative. So they're very bearish about even the market has recovered so much. They're still so bearish now. But once the reopening comes, I think that will really normalize a lot of things around the region, and especially if the Chinese are allowed to move. So there will be it should benefit the Southeast Asia, to all the destinations. Maybe in Indonesia, hopefully in the Philippines. I think the biggest probably the first to stop will be in Macau. So Macau issues, all the gambling issues in Macau has really gone up 20, 30, 40%. So it's the same as what's happening to us here. Not only here, but all the emerging markets have rallied a lot because of this pivot from China, anticipating pivot of China, anticipate the slowing down of the Fed. Because of the slowdown in terms of the hiking of the Fed. So I think it should be more positive rather than negative, right? So this lockdown reopening will be good for the region.
I think that's very clear, no? So parang sabay lang dun sa global, the pivot, no? Parang global pivot and then the Fed and on China policy. All right, thank you, boss. Next slide, please. Okay, now going to the Philippines. Okay, is the Philippine banking system strong enough to weather any potential collapse of a major US bank? April, do you wanna take this?
Yeah, okay. So reminiscent of the global financial crisis. But yeah, I think so. I think this is the time that we're actually seeing the fruits of the bank's very conservative lending policies, the BSP's very conservative strictness and the policies, because we just came from a pandemic and we didn't even see the NPLs go up a lot, and the banks have set aside a lot of provisions. And even with interest rates going up, the banks are not seeing a higher NPL ratio, and that is despite increasing interest rates. So yeah, that said, I feel that the banks that have been very conservative the past more than 10 years are going to benefit. They're gonna be fine despite the rainy days ahead, or the rainy days that have been and continue. So they will be fine.
Okay, that's great to hear. Boss Edward, due to the compounded external global events on top of this pandemic, we're still just reopening right now. Is the PSE still relevant? Ang ganda ng tanong, is it still relevant? 9 years we haven't gone up. So
10 years.
10 years. So paano na, boss?
If I say we're not irrelevant, then we should be not in this business anymore. No? So I really believe, and I was just explaining to our visitors a while ago. We have been in business for the last 10 years, and the market did not go up. But the number of clients, 2012, remember April, I asked you to do this stat. From 46,000 in 2012, today we're at 400, 500,000 customers. So I really believe that we will, as long as we're there to educate the investing public, create awareness that they're buying good companies through time and let money work for you, let them work for you. I think we will continue to be relevant. Because you have to remember that most of the Philippine companies that are listed here, the blue chips, are generating a lot of cash, and they're continuously paying the cash dividend, the dividends that is required. So I think it is very important that each of the investors should see it as a long-term investment, that they should continue to set aside, and let all these major companies work for them. I think that's very important. That's why we always focus on passive investing. And the reason why we're doing all these things is that after 10 years of investing, now you need to understand a little bit about active investing, right? When markets are oversold, markets are expensive, you need to top slide so that when it goes back down, we can buy it back, so to increase the yields, to increase the return. So that's one of the reasons why we're here to guide, to help and guide our customers that have been with us for more than 20 years, right? So I think I gave that talk in 2018-19 on the investment summit, that it's basically, you have to understand risk on, risk off based on the different policy driven crash, right? Event that are driven crash. Because if you don't know when to step aside, I mean, market can go down 10, 20, 30, 50%, and you'll really be at a loss. No? So I think we will continue to be relevant. And that's our role. The role of COL is to continue. I mean, we'll be spending a lot of time going to the senior highs, colleges, different colleges, and give this kind of passive investing. So we believe that that model has worked for the last 10 years, and it's going to work for the next 10, 20, 30 years. I think the Philippine market will also be to continue to grow. And hopefully our government will put the act together and really support the industry itself. Though. I hope I answered that short question, but very long answer.
Yeah, the good thing is, boss, di ba, the good thing is for the last 10 years, even if prices didn't go up, earnings went up naman, di ba? Multiple
Yes,
times for the companies, right?
business
Making
are
them more
growing.
attractive. Yeah.
That's right.
Okay. Outlook on the peso. April, do you want to start? And maybe I could go to Sir Juanis regarding the technical outlook. Like fundamentally
Okay.
first, like April, what do you think?
Yeah. Alam mo, sadly, no, mga Pilipino, wala tayong love sa peso. Inisip natin the course of least resistance is for the peso to continue depreciating. But if you do a side by side comparison of the peso and the DXY, no, the dollar index, tama yung sinabi ni sino nga ba yun yung minimum nila? Na the weak peso is due to the strong dollar, largely. Okay.
That's true. That's true.
Yeah, but that said, okay, I admit we do have our own problems, our current account deficit, the budget deficit. But if the dollar weakens, I think we will benefit, and that would lead to a stronger peso. But will we go back to where we were, say, during the pandemic? Maybe not, because we do have our problems, such as the current account deficit and the budget deficit. So that should prevent the peso from um, reversing trend on a consistent basis.
All right. Okay. Okay. Thanks, April. Sir Juanis, on the technical side.
Yeah, well, I think the correction we've seen in the peso dollar rate has gone up quite a substantial amount already. I anticipating support close to where it is right now, about 55.50, maybe an extreme 55.20. And primarily because since the dollar is still relatively weak, there could be a little bit more. However, I'm seeing quite oversold readings already. There could be a potential recovery, maybe within a range closer to 56.50 or 57, as I would see that'd be the next resistance. I would still be in the camp of, if we do see a rally, maybe you can go ahead and sell the dollar there.
Okay, very clear. Thank you, sir. Next slide. Okay, questions on the bear market. Okay, sige. How can we tell that the bear market is already over? Is it the right time to top up? Sir Juanis, maybe you want to start?
Well, it's hard to actually pinpoint the end of a bear market because you're going through two things. You have people who are forward-looking, trying to price all these things at the same time. At the same time, there are people who are listening to all economic signals, and that takes a while before that comes to reality, right? And so where are you in the middle of all of that? And that's why I think it might be very difficult to just say where exactly does it end. But let's look at it one step at a time, right? I mean, first we have to identify whether the market had been able to show you a bottom. If markets are showing you a particular bottom already, and you've seen the first rally, are the headwinds gone or will they go over in time? And I'm in the camp saying that probably headwinds will probably, linger for a while and slowly simmer off. So I would say yes, I think it might be the right time to be able to top up because the market cannot run away from us from this stage. And since we've seen that an escalated type of movement in terms of recovery, I don't think you want to wait for this to pull back before even thinking about top slicing because you won't be able to top slice anymore from that point on. So I think the safer bet is to be able to do it as it climbs. I think our chairman said that earlier, right? As the market is climbing up and is showing that extreme top slice already there, even if it's 20 or 30%. That way you can put that into your pocket, and in case any volatility comes, you're okay. At least you manage to be able to walk out of this with something. So don't always focus on the actual ending. Just look at the signals, see how the things are moving. That alone should be able to gear you up.
Okay. Boss Edward, what are some other indicators that you wanna share?
The sad part that if you see the market, the beginning of what we call stage 2, from there are four stages in the stock market. We classify it as quadrant 1, which is what we call the weak bear, which is what we're experiencing today. Then the beginning of the bull market is when earnings starts, interest rates start coming down, and then you have the beginning of the of the bull market, which is wherein multiples are basically being more aggressively, earnings are going up very on double digit because of the interest rates has gone down. And then the stage 3, which is quadrant 3, which is what we call when everything is expensive, that it's called what we call it's like a distribution stage when valuations are stretched. And then, of course, the declining stage, which is quadrant 4. So there are basically 4 kinds of sentiment, market sentiment on how we look at it. So what he's asking basically is that, do you think we're going to quadrant 2 already? And the answer is no. The answer is no. We're still in quadrant 1. We're still in what we call an accumulation stage. In accumulation stage, when we have identified the bottom, what we need to do is you need to buy low, sell high. Basically, it's accumulation. Right? So if you're able to buy, you have to buy when markets are being sold down, when valuations are there's no interest, valuations are cheap. I mean, that's how we should wear this hat. You don't want to be chasing prices when you say that the bear market has started to rally. I mean, prices have gone up already 30–40%, right? So these are the challenges of each investor. So you have to wear that investor's hat, or you're wearing the trading hat now. If you're going to wear the trader hat, then you talk about, is the bear market over? Are we going to start the beginning of a trend, a major uptrend or a bullish trend, right? So that's very different. But for us, we basically wear two hats. That's why we're called value momentums. That's how we teach, right? You need to know both. So during these stages, this stage of accumulation stage, we want to be buying all these blue chip companies at the discount. As long as it's selling at 15, 20, 25% discount to fair value, we want to be accumulating it. So as prices goes to resistance, we want to be top slicing it. So that's a strategy we're encouraging most of our customers to participate, that you need to buy low, sell high, especially now that we're still in this, what we call the weak bear, right? With all the headwinds coming, interest rates are all at all-time high, a lot of headwinds. But then when prices goes down, you want to be accumulating it because you're selling at a huge discount, right? So the problem is when the bear market is finished, we're in, that means interest rates are rolling over, right? Because there's a contraction in the economy, there's a recession. As interest rates go down, the market's already going up, rally so much already, right? So then you think again, do I top up? Do I add more? Wherein now, as volatility comes in, then you'll get scared again. So we're in the camp of stage 1, still a weak bear, a lot of headwinds, interest rates are all-time high, but you want to be buying cheap, right? That's the reason why we last month or 2 months ago, we said that they should be accumulating it, right? They should be doing a cost averaging. It's just that, of course, nobody knew that it's going to run so much, right? And that's the reason why today we're saying that they need to top slice. As prices are elevated, you want to top slices in case anything happens, it goes back down. And it will take a while for markets to reverse, right? Because of interest rate are still at the elevated, at the all-time high.
Yeah, so far now, if I may summarize everything so far, because a lot of things have been said the last 45 minutes. But it seems to me that the consensus view so far is that while we have rallied and we do welcome the rally, which is showing us signs of good things ahead, we also have to be careful about chasing prices right now because of the overbought condition. And in fact, instead of that, we advise our clients to take some profits off the table because of the headwinds, right, that are still there. Kahit papano, it's gonna slowly dissipate, hopefully, but it won't go up in a straight line. I guess that's so far if I could summarize the first 45 minutes. Okay, April, do you want to add anything on the indications on the end of a bear market, or?
Well, siguro na lang right time to top up. Like for us, it's really valuations. If the prices are so cheap, like ridiculously cheap. I mean, we cannot talk about it all the time. Like the banks, diba? We've talked about, say, the Robinsons Bank acquisition, the RCBC acquisition. They were priced above 1 times price to book value. But then if you look at the banks that are listed in the PSEi, most of them, like even Metro Bank, which is the top 3 biggest bank, is trading below book value. Now that tells me that these prices are ridiculously cheap. and they're just there because we are in a bear market. But then if conditions normalize, then they're not gonna be there anymore. Which is why, is it the right time to buy? I think um, it is. I mean, when prices are cheap, it is the right time to buy. But I think it's more of what's your investment time horizon? If you expect to make money right away, then maybe, yeah, now is not the right time. But if you have a long-term investment time horizon, then it is a good time to buy.
Okay, thank you, thank you. Next slide, please. Okay, on the short-term expectations, no, what is the outlook for the end of December 20, specific end of December 2022, which is 3 weeks away? Is it a good time to enter stocks now, given that the price is already high, or should we wait for a pullback? Can we see the same low or higher low moving forward? Right. So I don't want to add any pressure, but if I recall, last September 27, you guys gave a support target of 5,700 at that time, which turned out to be correct. So no pressure, but baka mataas ang expectations ng clients natin. So what's the outlook, guys? I think medyo nasagot na during the past 45 minutes, but if you could just like summarize or highlight a couple of points. Sir Juanis?
Okay. Well, in terms of the upsides, I think we've managed to be able to see round about where we're probably going to be ending, and I thought the next resistance would be about 6,870, which we missed just a little bit, but we're kind of in that range. Can we come back and actually target? I think, like I said, we still could have a little bit of room, especially if we do see some rotation. However, normally, I will tell you, normally in the first rally, it's normally the blue chips that rally first. When we rotate, they normally rotate to second and third liner. So what happens, the impact on the index becomes muted. So more likely, I think we've seen where the index would be already for this year. And then I just hope that rotation can be active enough to keep activity very much open and just keep us sideways for that. But, in the last so many years, we've always noticed some turning points maybe closer to January. So keep that in mind.
So baka January rally. All right. Okay. Boss Edward, like with regard to potentially seeing the same low or even a lower low or higher low, which do you think is the most likely?
Probably higher low.
Yeah.
I'm on the cusp of a higher low. So just overbought, right? When you're overbought, you just basically have to it's a duration. The duration is very important. So I think we've seen the temporary top. We've seen the high for this rally, and then I think it's just a lot of profit taking will be coming in, right? And hopefully that it doesn't go to retest the previous low. Just stays here for like Juanis was explaining, whether it's a square root or it's a double bottom or a higher low. I think it should be a higher low. I don't think it's gonna have in the euros unless another geopolitical thing happen again. But in terms of the China pivot, in terms of the Fed pivoting, slowing down in terms, I think it should just be a sideways profit taking move rather than anything else.
Okay, thank you, boss. April, I'll save your part for the a bit longer term horizon, which is I think in the next slide. Can I go to the next slide? I think that's for 2023 outlook. Okay, so April, what are your thoughts regarding next year? If you want to be specific, the projected PSEi level, our end of the year target for next year, would you like to?
Okay, yeah, I think we did the exercise already in our target based on the bottom up target is 8,100. So that's a huge upside. Whether or not that will happen, I mean, depends. I mean, okay, whether or not it happens, it just proves that the market is cheap.
Okay. Yeah, interesting. So just to clarify to our clients, what bottom-up target means. It means that we get our analyst target for the individual companies, and then the equivalent PSEi target of those individual targets would be our bottom target, would be the 8,100. Okay, so mataas ang upside, no? I mean, just like based on fundamental valuations. All right, Sir Juanis, like thoughts for next year on the PSEi?
I think next year we'll close higher. I'm looking also pretty much at the target that April had. I was looking at maybe a reachable target up to 8,250. Again, barring what our chairman said, that any geopolitical event surfaces. But I think if at the way things are going, I think we should close higher enough to be able to justify investments today.
Okay, great. Boss Edward, do you want to add anything to that?
No, I really hope that the US has a soft landing rather than a hard landing. And as far as the Philippines is concerned, like what April and Juanis is saying, is that we are basically at very reasonable valuation, very cheap valuations. It's just that the no interest is still here. But I believe that as interest rates globally, the US 10-year starts moving lower, you will see inflows to the emerging markets. So we should be much better for 2023, because I think the storm is finished already as far as the US dollar. The strength of the US dollar is we've seen the peak, right? So you might see some rallies because it went down a lot, right? But then overall, you know that the big picture is that we are on the way down as far as the strength of the US dollar is concerned.
Yeah, very interesting. No? And just to, again, reiterate, because I think last session we also mentioned this, that one of the variables that we always look at would be the 10-year and the dollar, right? I mean, the US, the 10-year rate and the dollar, the strength of the dollar. Yeah, so I think we could continue to look at that, and that would continue to drive markets going forward. So far, the last month, medyo pareho silang pababa, lower interest rates, and the dollar has been also weakening a bit, which has been good for emerging markets. All right. Go ahead,
Charles, add one thing. You have to remember that the Fed is behind the curve. The Fed is really behind the curve. So for us, the 10-year US Treasury is what we always look for, because that's where you can see whether the market is really going up or going down, right? So it's really the risk on, risk off is based on the 10-year US Treasury. That's the most important. What we have learned this year is because, probably end of last year, was the 2-year basically is because that's where the Fed are normalizing. They're watching the 2-year, right, catching up, because there's an inverted yield curve that's happening already, right? The Fed is aggressively increasing. But as long as the 10-year starts staying here and they're rolling over, I think then it's a reason on all other asset class.
So the 10-year, the secondary market is already telling you that the Fed is about to pivot talaga.
That's right.
Okay, that's clear. Okay, thank you. Let's go to the next slide, please. Okay, on specific industries or sectors, what are the best industry or stocks to invest to? You know, so actually this is the most asked questions. No? So 41 people asked this. No? So in one form or another. Yeah, what are we looking at, April? Which one do you like? Sectors or stock picks?
Okay, so the sectors that we like, well, you still have the banks, which would benefit from the higher interest rate environment. As you said, asset quality is not an issue as far as the Philippines is concerned. Then you have your defensive sectors such as power. And finally, I would like to add consumers. So medyo may mix yung consumers ng of course, resiliency of the Filipino consumers, and secondly, of course, they will benefit from the lower commodity prices, which would lead to higher margins for next year.
All right. Thank you, April. Boss Edward, I'll go to you first. Which are your last time? Just to remind the audience again, last time your pick was SM, and it did rally significantly. They're from 700 plus to 980, right? So it's just huge rally. Right? So I guess before you give your topic first, yun dun sa mga nakabili ng SM, I mean, is it still also applicable? Take some profits off? Is that still the recommendation that you want to give?
Well, what we do is that as long as the price has gone up 8 to 12% of your purchase price, we always advise, because it doesn't go up in a straight line, right? Because SM, the target price is still 15% below the fair value. So it's always just prudent for us to take some money off the table. So we always top slice around 30%. If we can have at least 8% of the 8% margin, profitable margin. If you're not making more than 8%, it doesn't make sense to top slice, because the fair value is still much higher than the 900 pesos today. So again, you can just hold it, right? But if you're making more than 8%, I think 30% top slicing is good. Goes back down, you save it, you buy back the 8%. So if we believe that the market is still in a accumulation stage, or stage 1, which is basically a weak bear, right? Then you should any rally should be top slice, goes back down, you just buy it back, and then over time you'll outperform the index.
Yeah, great. So, Boss Edward, is SM still your topic for, I mean, going forward?
I have another issue which I like also, but this one is a what we call a probably a high growth. No? But the problem with this company is that we're waiting for the expansion really to come on stream. No? So it is a very good opportunity right now. If you have a longer horizon, you should start accumulating this issue. So the next one that I like is it's a mid cap. It's a DNL. It's a consumer stock. It's a supply chain. I mean, they've been consistently, their earnings are already way above pandemic, and they have a huge capacity increase in capacity, which of course has been delayed for the last year. But hopefully by the third quarter or second quarter, they can start operating when they get all the permits in already. So the company is called DNL.
All right. Yan, para sa mga those who stayed for an hour, no? So that's your reward.
But you have to remember, it's a very illiquid issue. It's a very illiquid issue, so they have to look at it from a much longer perspective. No? So it's like we classify it as high growth because it's double digit in terms of earnings. They have to look at it like you have to invest it like a business, right? Like you believe in because we always talk about what we call the 4 Ps, like people, product, potential, predictability, right? So they qualify in all the checklists, right? People, the principals has been in the industry for so many years, the Lau family. Products, a great product. I mean, they don't have to do anything. They supply all the big chain in the Philippines. In terms of potential, they're increasing their Batangas plant, right? Huge capacity, another additional 32. You have to correct me if I'm wrong. April, it's about 30-40% increasing capacity. And then predictable, they've been generating profits, huge cash flow, and paying out the dividends. So, but it's a mid cap, so you need to be careful. It's not as liquid as the normal blue chip companies.
Okay, great. So more long-term investment. Please be careful with causing the stock to break out. Baka magunahan tayo masyado. All right. Thank you, boss. Sir Juanis, on a technical basis, are you seeing some strong issues or even weaker issues or industries?
I think the ones that April mentioned earlier are actually all technically strong. The banks primarily were the first movers, and I mean that's always a healthy sign. The weakest or the laggards were like properties, which because some of them, of course, took time to be able to recover with a lot of issues going on about higher interest rates and the potential POGO issues. I mean that's what hurt them. But I would still think that a lot of the consumer stocks and the banking issues will probably continue to do the resounding after the pullback is done. So I will continue to remain focused there.
Okay, thank you, sir. Yeah, next slide. Let's try to rush up a bit because we have really a lot of advanced questions. No? So, okay, regarding REITs, is it advisable to invest in REITs at this time? And maybe your most promising REIT, April?
Yeah. So yeah, I think as far as REITs, I guess for me it's a yes, except that well there is a risk. And there are concerns, okay, because this is what's happening sa office sector. One of the reasons why we were excited about REITs is because most of the REITs have offices and they are PESA accredited offices. And the sector that is growing the most right now, as far as offices is concerned, is the BPO sector. And the BPO sector, they want PESA accredited offices for the tax benefits. But then recently, the BOI saying that they can provide the same benefits as PESA for offices that are not PESA accredited. So now there is this concern that BPOs may no longer need to locate in PESA accredited offices. And we know that there is a high level of vacancy out there for non-PESA accredited offices. So medyo may ganong factor going on. But then that said, there are some REITs that are not naman on offices, and I would be more keen about buying them because they are now yielding attractive yields of say 8-9%. And of course, with the expectations that interest rates would be headed lower, now would be a good time to lock in. And I think we've kind of talked about it. We are most excited about C-REIT. It is into power and renewable energy. It is a company that leases out the land that is used by solar power companies for their solar panels. So yeah, we're most optimistic about them, and they will soon be acquiring some other properties which they will lease out, which will allow the dividends to grow further.
Okay, thank you. So, yan, may another topic tayo, no? So, thank you, April. Yeah, next slide, please. Okay. Okay, is switching to more bullish sectors such as banks still viable if you do switching from losing positions? What will I do with my existing portfolio shares of stocks? All negative for a long time, no? So, I guess the questions for these two would be what do we advise people who are holding like losing positions, and do you ask them to switch or do you ask them to hold or buy more, or what's the advice? April, do you want to answer?
Yeah, I wrote a column on that, and my advice is, to switch to better ones. First of all, you can look at your positions, and if you have a lot of, say, second liners, third liner issues, you could switch to more blue chip type stocks, index stocks, because those are the sectors that should go up first. And when switching to the larger cap issues, you could like focus on those that we recommended, the banks and the consumer companies. Yeah, so kasi in that way, well, you're not really realizing your loss. You're switching it to something that could move faster, no? So you don't have to feel as bad as say, selling at a loss. It's more like you're going to something that could go up faster, that will allow you to recover your losses faster.
Yeah, that's a much easier way to overcome that not wanting to sell at a loss, right? Okay, regarding this one, are we going to top slice our 5% earnings given the perceived recession early next year? I think this was already answered a while ago by Boss. Basically, as long as it's above 8%, then it makes sense to top slice. Like, I guess this is true with most of the companies, not just SM. Right? So I guess we can move on to the next slide. Okay, on stock picking.
Charles?
Yeah, go ahead, Boss.
Yeah, you know, The biggest problem with most investors, wherein you are seeing huge losses, is because they probably participated in all the penny stocks, right? All the narrative stocks that were promoted in the late 2020 and early 2021. And most of these issues have gone down 80, 90, 95% already. So this is the biggest challenge, no, for most investors. No? And I think going forward, I think most our clients should understand that. That's why we teach this. We have a checklist. It says that most of our issues are more of what we call the mature growth, mature companies, right? Most of the blue chips are mature growth and mature growth. So it's not as exciting as the speculative issues, right? And this is the challenge that we have, right? Because most of the stuff that we recommend are basically mature companies or mature growth funds. It takes longer for it to the expectation should be tempered, right? It's not going to run away unless the interest rates back to QE, interest rates go back to zero. Then you have all these speculative flows that are coming in, right, to take advantage of the cheap money that's happening. But for most investors, they have to have learn that in order for you to become investing will be profitable, is that they have to buy all these good companies that are selling at a reasonable price, and they're being paid a cash dividend, because that cash dividend will indirectly, they're paying you for them to grow, right? Meaning I'm paying you a cash dividend for your money that you stayed to invest with me, for them to grow. Like we said, for the last 10 years, most of these major companies have grown by 10 folds, right? A lot of it gone so much. The problem is the market did not go up, right? That's really the challenge. And I showed this so many times. Like even the dot-com crash, Microsoft was growing at 300%, but the market did not go up for 10 years. And after the 10 years, it went to the moon, right? So they have to have that patience, that they need to invest in businesses and let them be paid, right? That dividend is very, very powerful, because that dividend will continuously compound by itself, right? So they have to understand that now, if you want to do all these speculative issues, yes, you can make a lot of money for a while, but then if you don't understand what you're doing, it's eventually, when the market goes down, it wipes everybody out, right? So those are the challenges, because most people, they like to participate in all these speculative issues, right? And today, I mean, most of them have gone down 80, 90%. So that's why the recommendation a while ago is that you need to switch, because those issues, it will take a while, right, before it starts moving, right? Because most of them are hurt. And people have realized that there are really just nothing inside, right? There's no revenues generating. There's nothing. It was just purely speculation that happened during that time. And people were taking advantage of marking up their companies that have no value at all, right? So these are the challenges that we have.
Yeah.
So they have to switch it. They have to buy a good company and then just let it continues to have the cost averaging. So by the time that it goes up to fair value, then they can stop slice it again, right?
All right. So the clients, we really have to qualify between mature, solid companies with earnings and preferably dividends, versus speculative companies that are just filled with promises and future prospects that could really take a really long time for it to even move.
That's
And
correct.
so they have to differentiate the two types. Okay, thank you for that clarification, boss. Okay, for the next one, okay, what are the parameters or factors that you use to spot market leaders? Best way of choosing the best company in trading. Sir Juanis, what are the ways to spot these leaders?
Well, of course, you can use some technical indications to be able to do it, but I think you have to couple with that what you're seeing around you in terms of market sentiment, right? Because I can tell you that there are certain indications that can show high momentum, but if your sentiment is very depressive, that could limit some of the movements that you're actually looking onto. maybe just a simple positioning of the stock price to its moving average, and maybe even looking at MACD and ADX levels should tell you how to stay with or stay away from issues alone. Because if you see that the price of things are trading way below their moving averages, and you can see their MACDs are very negative, ADX levels are still pointing down with heavy. I mean, there's no need to fight that type of battle by bottom fishing there, right? I'm answering it that way because you're asking what's choosing the best company in trading, right? So if it's trading, you really have to look, see what are the technical indicators in your favor before you can come around to be able to do it. Stay with the leaders, all right? Because if you're with the leaders, you know that's where the money is going. If that money flow is there with you and it's backing you up, more likely it will continue to be there. And that's the reason why people are taking their shot there, because they know and they can feel, they can see it. And those are the things that you would see in market activity. So as April pointed out, the banking, consumer, and maybe even the power companies, and unfortunately there's only one or two. So that's why I'm thinking maybe the banking and the consumer, we'll probably see the leaders there. Continue to be able to focus your activity on there and just stay with the stronger ones, or buy them back preferably after pullbacks. And I think you'll do more than okay.
Okay, well said. For Sir Edward Lee, I would like to ask how you screen stocks and what are the indicators that you use to accumulate position?
Like I said a while ago, I'm a value momentum type of investor, trader. I'm both wearing two hats. I wear the investing hat and I wear the trading hat. So in the Philippines, it's much easier. I just depend on April and on April's calling the shots, right? And I have my own list of stocks that I like. For example, I'll give you some example. I like, for example, you have to remember the Philippines is more mature growth, mature companies, right? So it's not gonna go out too much in terms of just a few issues that we can basically every day you probably would chart what 30 to 50 issues, more than enough. No? What I've been doing for the last couple of years, the last 2 or 3 years, was always a buy low, sell high. It was always a swing trading, right? Because when I see capitulation, whether it's rational selling or irrational selling, I will already set it aside, especially on the big caps when they're being like I said the last time, is that the reason why we like SM because SM was deleted from the FTSE. So when it's being capitulated, it creates an opportunity for us to participate because we know that it's being sold at a huge discount. So that's one. We're looking always for values, and then waiting for it to capitulate, and then participate. So I use a few looking for what we call the irrational selling. So I use a lot of what we call ADX. ADX is basically the directional movement of the stock. Whenever ADX is going about 30, 40 on the downside, for example, it's telling me already that it's good companies are being sold at a huge discount, right? So I screen those issues. Not only in the Philippines, but all over the world. So let's say, for example, the last 2 irrational selling that we've seen is in Vietnam. So we participate in the Vietnam ETF, or even in the Taiwan, during the Taiwan semiconductor are being sold down at a huge discount. And then, I mean, we didn't know that Warren Buffett will participate in that, right? But of course, as it goes up, we top slice already, right? So these are the things that we look for. Looking for irrational selling globally, we look for sectors or ETF that are being sold down. So that's one. We use those indicator to look for values, deep values. We want to see the people panicking. So it's like a lot of irrational selling, wherein the ADX goes to 40, 50, 60. That is telling us that there's something going on. People are panicking. People are getting out. It's called a capitulation mean reversion play. It has been happening the last couple of years, and we've done well. We've done well for those kind of formation. Very different from Juanis. Juanis would be looking for strong issues that are that has magnitude, and then quieting down, and then participating. I'm much older now, so I don't have time to watch the market on a 24-hour basis. So I leave it to the young traders to do those things. But during my younger days, I would also do the same thing. I would look for strong issues that are pausing. Strong issues that are pausing. So we teach this. We teach what we call the looking for continuation patterns, like what Juanis will be teaching. It's either era patterns on consolidation, ascending triangle, rectangle, and then flag pennants for stronger issues. But in the last few, after the 2021 collapse of the penny stocks, we don't see momentum issues anymore. We have not seen it for the last almost 2 years. So you need to understand what you're doing, because if your expectation is that without understanding the issues that you are buying, and we always classify it either when it's a 45 degrees, 60 degrees, 90 degrees. So there are a lot of things when you're actively in the market. But for us, for me personally, I will always look for the mean reversion. I like markets when markets are basically being panicked, especially in the Philippines or in Asia, wherein there's it's an inefficient market. When foreigners are liquidating, especially during the rebalancing, wherein you have prices that are being sold down at a huge discount because of illiquidity, my eyes is all wide open to participate in those things. So lately, for example, you've seen, let's say you've seen GD Cap, right? So Security Bank, the last rebalancing, then you have GD Cap today, same thing. After the rebalancing announcement, the rally comes now. So it's a capitulation mean reversion also. So I focus most of those kind of play.
Okay, thank you very much. Thank you. Very insightful. Okay, let's dividend. So Boss Elron mentioned a while ago, like choosing stocks that pay dividends. April, what are some of the stocks that you like, dividend stocks that you like?
Okay, so yeah, so we talked about the REITs. C-REIT, we like that. I would normally also recommend telcos, except right now my issue about telcos is that their broadband business, the growth is slowing down, so that might hurt the sentiment for telcos at this point. So rather than them, I would recommend, say, buying power companies that pay huge cash dividends, and one of them would be AP. I think AP pays a good cash dividend, and if the power supply situation next year remains very tight, they should be one of the major beneficiaries, given that they are selling to the wholesale electricity spot market, and yeah, if prices go up there, they should benefit from them. No, so I think Meralco also has huge cash dividends. No, so those are some companies with huge cash dividends.
Okay, thank you. So I think we only have a few minutes left before we have to end this. I know we're already way past 1 hour. So let's go quickly to the live questions. Maybe we can answer a couple. Okay, given the scenarios presented for a bottoming out, can the market still continue to see lower lows if and when the US inflation number continue to move up or even spike up? Okay, so what are the expectations on the, see higher lows or lower lows with regard to the inflation number? Sir Juanis, what are you thinking?
I don't see any spiking up taking place on inflation, not unless a new geopolitical event takes place. So I'm not trying to factor that in. In fact, we're seeing a slowing down already. There could be a little rallies in some commodity prices, maybe even oil, because they've fallen quite a bit. But I am not looking for a spike up to be able to drive a monkey wrench into our condition. So I think in terms of the bottoming out, I'm not in the camp of seeing a lower low. And I think what you do is you get a pullback, you'll see a higher lows, but you probably see several of those opportunities that they come in, and those might be the better opportunities for you to pick up, but not to buy at a lower low. I don't think that's going to happen.
All right. Yeah, let's go to the next one. Do you have more? Given the expected global economic slowdown next year, how will it affect the remittances of OFWs and consequently the earnings of companies? April?
Yeah, okay. So I think that has always been the concern of everybody, but so far, year after year, we have never seen OFW remittances go down. Um, so yeah, will that happen? I don't know. I'm not sure if it will. Earnings of companies, well, domestically, I mean, we're still doing okay, so I'm not so concerned about it, you know. Okay, okay, so this is similar to what happened during the global financial crisis. People were so worried about OFW remittances going down. During the pandemic, we had the same issue. And, it never happened. So, yeah, I'm not really that worried because that's the beauty of the Filipino family values that our OFWs out there, they really are yung ang ating bagong bayani because they remember their family back home and they make sure that they send enough for people to
Yeah.
spend here.
Yeah. All right. So looking at least positive on that end. Okay, maybe last question for the live Q&A. If there will be a global recession next year, it means the Fed will decrease the interest rate. Will it be good for the market, even if there's a recession? Oh, very, very good question to end with. No? So, recession next year, but rate cut, potential rate cut. So net, will it be good for the market or not? So, boss Edward?
Well, said a while ago is that we believe that the recession is pricing. The U.S. have priced in already a recession because the inverted yield curve has been there since the last 6 months or 8 months already, right? So that means they're projecting already 2023 will be a recession. So it's really whether it's a mild recession or it's a hard landing or a soft landing, right? So we think it's a mild recession, especially with the reopening of China. I just want to reiterate what April just said. I gave that talk about a few months ago about what is this great Philippine tailwind. It's really the human resources, the values of the Filipino people, the family values, which will continue to bring in the OFW money. Just to answer that question a while ago. So you have to remember that the demographics, the English speaking, and if there's a recession in the US, most companies will be basically outsourcing it to us also. So we're basically more positive than negative. As far as if there's a recession, that means the Fed will pivot. The answer is yes. So if the Fed pivot, the 10-year US Treasury goes down, it's a risk on to the emerging market. So it's just correlated. It's inverse correlated. Yeah.
Okay. Thank you. Yeah, so I'd like to ask before we end, like to ask for your final thoughts, no, and final thoughts or advice to our clients, and maybe in the process also, let's answer the question again. The title of our webinar is the bear market over? No? So is the bear market over? Why or why not? And if you have like a short, advice in light of your view. So, April, you want to start?
Yeah, so ako personally, okay, is the bear market over? Ako, I think it's more of a bottoming out process. I mean, you can't like switch from a bear market to a bull market just like that. But of course, there are still a lot of headwinds. So that said, I think yun na nga, although I am a fundamentalist, I agree with the view of Boss Edward and Juanis that it's a buy low, sell high market. Where markets go up, I think it's a good idea to take some profits off the table because of the numerous headwinds. Um, there are a lot of questions that we don't know the answer to. So yeah, I mean, if this bottoming out process takes a while, it would be a good idea to take advantage of, rallies to take some money off the table and then buy on the dips.
All right. Okay. Thank you, April. Sir Juanis?
I think April turned enough of a technician to have all my answers in there also, right? I guess you sounded like a technician, April. Thank you. Thank you very much. Good job.
Would you like to add anything else, sir?
I maybe just advice, like you said. And I
Okay.
think my advice, I did see some of the questions earlier and say, what do I do with my red portfolio? You've stuck with it this long. And now that things are starting to simmer down already, I don't think this is the time for you guys to throw in the bag, right? I mean, look now for the opportunities that are about to come. We might have to be able to weather the storm just a little while longer because as it was pointed out, there's still some headwinds. But I think since the worst is over already, we're looking at really recovery cycles coming inside. So just keep your mind focused on that already. Bear with the pain a little bit longer and look for the opportunities that are going to come out, especially after the second half of next year. I think you'll probably see things much more clear. So, just stick it out longer.
Okay, thank you, sir. Thank you, sir. Boss Edward? Is the bear market over? And what's your advice? Kailangan may sagot talaga. Is the bear
Yes.
market over?
Yes, with the
I-
bottoming out.
I think we're all the same, right? We believe that we need to stay positive. We look for valuations that we have never seen so cheap. I believe that as interest rates start rolling over, if there's a recession, if there's ever contractions, that means the Fed will pivot. No? So as the Fed pivot, whether it's will be similar to 2008, 2009, where interest rates go to zero, which I doubt it. No? I really believe that you have to be, most of our clients have to be focused on the businesses, the companies that they're buying. And they have to accumulate it to a point wherein now they're on the driver's seat, when market rallies, you can top slice and comes back down, you buy it back. And when you can continue to do that, and then you're being paid a cash dividend, right, for you to hold those portfolio, those issues, then over time, you will outperform the index by itself. Now, so I am really in the camp that, I mean, bull or bear, basically, I'm in the camp of we are value investors, really. The only thing is that we have an advantage. We understand price also. We are wearing a lot of hats, from active investing to passive investing to active trading. So these are, we teach this all the time, right? It's all in our YouTube channel. Please continue to learn, have that open mind, invest in good companies. And as it goes up, you top slice, please do not top slice 100%, because that means you're playing the game of an active trading, or, right? You want to be top slicing only 30, 40%, so that just in case it goes higher, then you won't say that, oh, I should not have sold everything. So everything is hindsight. Please have that positive mindset. Be open, and I think we're here. COL is here really to continue to. I think this probably will become a regular thing, I'm sure, because I think we owe it also to our investors, our clients, that we should always try to inform them as much as we can, especially when there is headwinds, when there's capitulation happening all over the world.
Okay, thank you, boss. Well said. No? So, yeah. So again, if I were to maybe summarize everything said today, I think for the last month plus, there has been some positive developments in the market. You see interest rates going down. You see the dollar weakening a bit, normalizing a bit, and as a result, you see the markets rising, which is already pricing in some of the dovishness that we're seeing going forward. So that's on the positive side, but maybe on the negative side, it's short-term overbought because of the huge rally. So we see that it might need some time to consolidate first, right? So in all, it's a buy low, sell high strategy again, at least in the short term, right? If you're a long-term investor, just continue to accumulate. And if you have a good price, if you have a chance to get a good price, capitalize on rallies to take some profits off of the table, not all, but maybe just 30%, right? Yeah, if you're a trader, just continue to buy the, you know, the stronger issues, right? And over time, as long as we're buying solid companies, right, with solid earnings, preferably dividends, then the outlook for the long term is still bullish, no? Same naman as with the last session.